Hi, my name is Yolandi Esterhuizen and I'm the Legislation Manager at Sage HR and Payroll. The Taxation Laws Amendment Act of 2014 was promulgated on the 20th of January 2015 and it contains a few changes with regards to ETI, and that is what I want to inform you about. Now, the two major changes is regarding the wage definition and the remuneration definition. Now, before I explain those definitions to you, I just want to quickly recap the qualifying criteria for employees to qualify for the ETI calculation. Now, the first qualifying criteria is an employee should be 18 to 29 years of age in the particular calendar month. Secondly, an employee should have a valid SAID or an asylum seeker permit, or now, and this is also an amendment, they can also have an ID in terms of the Refugees Act, and that will be backdated to January 2014. Thirdly, they should have been employed on or after the 1st of October 2013. They should not be connected persons to the employer or domestic employees. Now, another criteria is the employee should at least earn the minimum wage according to the wage regulating measure. Now, wage regulating measure again could be your sectoral determination, your bargaining council agreement, or a collective agreement. That is the first set of rules. Now, for an employee where there's no wage regulating measure applicable, should earn at least a wage of 2,000 Rand per month. Again, remember, a wage is the money I earn for ordinary hours of work. So it's basic salary or your basic wage. And that for an employee should be at least 2,000 Rand per month if no wage regulating measure is applicable. But that is where the first amendment comes in. That is applicable from March 2015. The reason for the amendment is that the law said if an employee where no wage regulating measure was applicable, if that employee was employed for less than a month, then a gross up calculation should happen. For example, if an employee was new or terminated, you would have to see if he would have earned a wage of 2,000 Rand a month if he was employed for the whole month. The problem came in that there were different interpretations of the wording employed for less than a month. So people started asking questions whether, say, an employee works for 2 days a week or in the mornings only, if that should also be a gross up calculation. Now, to clarify that gross up calculation or the conditions in which it should be done, the law has now changed. The law says if there's no wage regulating measure, then you have to look how many hours the employees were employed for. If the employee was employed for less than 160 hours in the month, you should do a gross up calculation to see what the employee would have earned for exactly 160 hours a month, and then determine whether that would have been 2,000 Rand or not, meaning that employee will qualify. If the employee was employed for more than 160 hours in that month, then no gross up calculation is necessary. So you can literally take his wage and determine whether it's 2,000 Rand or not. Now, if you look at the calculation, if you take 2,000 Rand a month and you divide it by 160 hours, which the law basically sees as a full month, the wage rate per hour is 12.50 Rand. So effectively, it means that the employee will qualify if he earns at least 12.50 Rand as his wage. That should be his rate per hour, and then he will qualify. Now, the second thing I want to look at is the definition of remuneration. Now, remember, remuneration is used to do the actual incentive calculation. Now, remuneration is the taxable earnings of an employee, the taxable perks, as well as the taxable company contributions. And that is used then to do the ETI calculation. Now, the same problem existed where we had to do a gross up calculation to determine what the employee would earn as his monthly remuneration if the employee was employed for less than a month. Due to different interpretations, the law now is making it clear as from March 2015. So what should happen from March 2015 is, if the employee is employed for less than 160 hours in the month, we should do a gross up calculation to determine what the remuneration would have been if he was employed for 160 hours a month. For example, if it's an employee that is employed for only 100 hours per month, maybe the employee only works in the mornings, then we should always determine what the employee would have earned for 160 hours. And based on the 160 hour remuneration factor is what we have to calculate the ETI on. And the same, once we did a gross up calculation, we calculated the ETI, then we have to proportion the ETI again to calculate to the employee's actual employed hours, for example, the 100 hours. But then, if an employee is normally employed for 100 or more than 160 hours in a month, then we never have to do a gross up calculation, meaning that we can take the remuneration of the employee as is and calculate the ETI on that, because the law sees a full month now as 160 hours. Now, to clarify, employed hours, what is the meaning of employed hours? Employed hours would typically be what is in the employee's contract. If the employee has a standard amount of hours or a predictability of the amount of hours that he's going to work, that would be your employed hours. For employees that maybe don't have standard amount of hours to work, for example, locums who work when exactly they are required to work, so they don't have a fixed amount of hours. So their employment hours would be the actual hours that they work. You can visit our website for more information on this topic or for the different options that are available to assist you in the implementation of all these changes.